Good morning to all and welcome. Thank you for joining us online today. I'm Theodora Antonakaki and I'm the Director of the Climate Change and Sustainability Center of the Bank of Greece. It is my great pleasure to open this third workshop dedicated this year to the role of insurance in climate change adaptation. The Bank of Greece, as early as 2009, established the Climate Change Impact Study Committee and produced numerous studies and reports on the impact of climate change for the Greek economy. Ever since, climate change and sustainability have remained high on our agenda and a strategic priority for the Central Bank of Greece. One of our key areas of work is our participation in the national 8-year project Life IT Adapted Greece. Part of our work in this project is on fostering an enabling environment for the financial sector and supporting adaptation finance. So in this context, we are also organizing today's workshop, bringing stakeholders together with the aim to address the barriers and identify the opportunities in adaptation finance, explore the role of the financial sector in mainstreaming adaptation finance and in reducing the risk through investments in resilience, and of course, fostering synergies and an enabling environment for scaling up adaptation finance. Without further ado, I would like to welcome the Deputy Governor of the Bank of Greece, Theodore Pelagidis, Professor Pelagidis, for his opening address. Professor, our Deputy Governor, the floor is yours. Thank you for being with us today.
Thank you, Dora. Good morning to all. Bon réveil. My pleasure to open this third workshop of the series on financing climate change adaptation, a workshop that will focus on the role of insurance this time in climate change adaptation. It's very well known that the climate crisis is rapidly unfolding. We have seen 42 Celsius in Paris this week and in other European capitals, with extreme weather events becoming increasingly frequent and intense. So adapting to climate change is crucial to minimize the adverse environmental, social, and economic impact of the climate crisis and build long-term resilience. Adaptation is a strategic investment with significant returns across multiple dimensions and time horizons. Although the need for adaptation is increasingly being recognized, funding levels remain limited, significantly lower compared to those directed towards climate mitigation. Adaptation financing relies primarily on public resources, highlighting the need at the same time to mobilize private capital as well. So this is very critical. Public funding alone is insufficient to meet the vast financial requirements needed today. So therefore, it's crucial to engage private investors, such as the insurance sector, using multiple, let's say, incentives criteria, etc. So the insurance industry, due to the nature of its business, is uniquely positioned to further understand and address climate risks. Insurers can play a dual role, in our view. First and foremost, as risk managers by managing climate risks, implementing incentives for their prevention, providing climate risks information on the economic impact of both the risks and the respective measures to avoid or to mitigate them. And second, as investors directing capital towards actions with significant contribution to adaptation. Therefore, the insurance sector's contribution can be crucial in advancing adaptation and adaptation policies, helping to manage the financial impacts of disasters in all sectors, as it can absorb some of the losses and provide relatively quick access to the funding necessary for recovery. Insurance is not a replacement for adaptation or a mitigation, let's say, but it can be a key part of the overall suite of measures to manage the risks of catastrophic climate change. As Dora said before, the Bank of Greece, we have, here recognized the importance of adaptation and have been actively working on the issue for over a decade, within our mandate, of course, and in close collaboration with the policymakers and the ECBO also. The financial sector can and is already playing a pivotal role in supporting the green transition and enhancing our resilience. So it is essential to continue exploring and expanding in this area. Thank you, and Dora, the floor is yours again. And I wish you a successful workshop.
Thank you very much. Thank you very much, Deputy Governor. I would now like to invite Stavros Konstantas, Director of the Occupational and Private Insurance Supervision Directorate of the Bank of Greece, for his opening remarks. Stavros, the floor is yours. Thank you for being
Very
with
much. Thank you very much. Dear colleagues, distinguished guests, good morning. It's a great pleasure to be with you today and participate in such an important workshop. I have been following the progress of the Life IP project with great interest over the last few years. And I'm particularly proud of the significant role of the Bank of Greece in this initiative. Beyond organizing workshops like today's, which bring together insurance professionals, government officials, European Commission representatives, and technical experts to discuss practical solutions, the Bank of Greece has a highly skilled staff capable of contributing substantial expertise to this project. Climate change has transitioned from a strictly environmental issue to a harsh reality with vast economic, fiscal, and social dimensions. Over the last few decades, Europe has faced rising losses from climate-related disaster, and Greece is certainly no exception. I will not stack on numbers and statistics, as I'm certain those will be covered in detail during the technical presentations later. However, I must emphasize that we are now facing a massive damage trend. While natural disaster costs average well below 1% of the GDP annually in previous decades, these damages are no longer spread out smoothly. Instead, they hit unpredictably as concentrated massive shocks. The insurance protection gap in Europe and even more deeply in Greece places enormous pressure on state budgets and creates severe, unexpected shocks and to household financial planning. To address this, institutions like the ECB, EIOPA, and the ESM have proposed technical frameworks to develop public-private partnerships, including a ladder approach to distribute natural disaster losses across distinct layers of protection, alternative risk transfers through catastrophe bonds, or a natural catastrophe insurance pool are, to name a few. From our side, as a competent supervisory authority, our focus lies primarily on ensuring the solvency of insurance companies through systemic shocks, while protecting consumers and on monitoring undertakings to safeguard the fair treatment of citizens, fair pricing, preventing greenwashing, and ensuring transparency regarding policy exclusions, among others. Furthermore, we endorsed state initiatives such as tax incentives, like the recent one, ENFIA property tax discount for insured homes, mandatory insurance for business with an annual turnover exceeding 500,000 euros, and mandatory natural disaster coverage for vehicles aimed at boosting insurance penetration. To close with, I'm confident that the presentations today will produce highly valuable insights. As the supervisor of insurance companies in Greece, my hope and expectation are that the ideas discussed today will be translated into immediate and effective actions. Unfortunately, when it comes to adapting to this new climate reality, time is a luxury we simply do not have. So thank you, and I wish you, to all of you, a highly successful and fruitful workshop.
Dear Stavros, thank you very much for your opening remarks. And I now have the pleasure to give the floor to Tilman Leuter, Head of Insurance and Pensions at DG FISMA of the European Commission, for the European perspective. Tilman, the floor is yours. Thank you for joining us today.
Thank you very much for having me. I hope the connection is good.
Yes, we hear you excellently. Thank you.
Connection is impeccable. Okay, so well, I hope the connection is as good as the rest of the conference, or the rest of the conference is as good as the connection. So I'm very happy to be here and to also address the climate protection gap from the angle of our policies, not just in insurance, but I'm also representing my colleague from DG Klima, Martin Spolks, who is responsible for the overall climate adaptation and resilience program. And as you know, that program does have a private sector financing angle in the sort of last two chapters. So the program, of course, is a lot about prevention, about reducing the actual likelihood of loss, but also the severity of loss by prevention measures, because insurance can only bring you so far. If there is a sort of almost unavoidability of loss, and the frequency is so high, and becomes uninsurable. So we have to obviously start by trying to reduce the loss impacts by taking preventive measures, and not forgetting, last but not least, to still continue, of course, also to reduce the CO2 emissions. We shouldn't have this debate now saying that we accept that we can not meet the Paris goals, and all that we do now is to prevent the effects of our failure to meet those goals. It sounds a bit like that when you look at protection gap issues. Yeah, okay, so we've missed the goals. It's going to be 3 degrees above the pre-industrial levels. We'll just have to live with that and take the necessary measures to protect us. I think that is slightly negligent. I think we need to redouble the effort also to reduce CO2 emissions. We need to protect ourselves, obviously, against the unavoidable consequences of not reaching those goals. But that doesn't mean that we can slacken off in our efforts to actually work against those goals. Now, when it comes to the insurance chapter, I think we have two issues which we will cover in the forthcoming climate adaptation and resilience program. One is indeed the protection gap, and the other one, and we're going to tackle it, let me put it like this, we're going to tackle it most likely, because no decisions have been taken, and the usual caveats, of course, but we're going to most likely tackle it from both the supply and the demand angle. So on the demand angle, the insurance industry points out that awareness is low. Willingness to take out insurance is not always at an optimal level. That is because households, but also small business, think that somehow they're not concerned by this, or somehow the next rainfall is going to pass them by. So there is a lack of awareness of people who are either working or living in endangered zones. So obviously, IOPA, Carlos will later come in and tell you that there needs to be more data, there needs to be more granular data on the actual risk zones, so that insurance efforts and insurance coverage efforts can be targeted at those zones at risk. But there is indeed a very low level of awareness of climate-related impacts, rainfall, heavy rainfall tonight, apparently, because today, even in Brussels, which is not known for this sort of summer temperatures, so we're having 35 degrees today during the day, and tonight there is a prediction that there will be, I don't know how many liters, I forgot, per square meters of rain pouring onto us. And our infrastructure and our system of how we build the streets and how we build the houses is not constructed to cope with that. Massive amount of rainfall in a very short period, huge amounts of water coming onto this country, which has no drainage, which has, well, it has no drainage which is prepared for that. So people are not aware how it can hit them and what form this loss will be. It might not be the heat, it might also be health related in the heat, but it might also be that your entire infrastructure is not equipped to also to deal with the consequences of this heavy rainfall. So awareness is definitely something where we are working on. This is also not just the insurance industry is concerned by that, but also the insurance intermediaries, because insurance, as opposed to many other financial services that my department deals with, is still very much a business which is intermediated. They're not so common that people take out insurance policies online on their own initiative, so they need intermediaries to guide them. So this is definitely also something for the Insurance Distribution Directive. What can we do to make people more aware of all the different ways in which the climate change can hit them, also in all the different unexpected ways in which climate change can hit them. And then, of course, there is the supply side. There is a huge debate, and I'm sure we will hear lots about this today yet again, about whether we have enough capacity to cover increased loss, increased frequency of loss, increased severity of loss, or whether we need other financing vehicles. And depending to whom you talk, there is the argument there is an abundance of capacity, there is an abundance of capital. We have a huge reinsurance industry which would offer very reasonable rates, because at the moment, counterintuitively to the temperatures today, the reinsurance market is considered as being soft. So reinsurance premia aren't particularly high, so there is a lot of capacity where primary insurers could have reinsurance. And then if you talk to the other side, they say that reinsurance is possibly there, but possibly at rates which don't make it attractive, at rates which then would not allow the primary insurers to still charge reasonable or affordable rate to the end customer. And once the market turns hard again, because there is a big event and the reinsurance industry has to pay out, then of course there might be a problem with capacity. So I'm not sure what is right. This is a bit of the dilemma of a policymaker. We speak to lots of people, we get lots of data, but if there is an obvious discrepancy in opinion, it's very hard for us to decide what to do, because everyone probably has a point somewhere. But what do we then do? Is there enough capacity? Is there enough coverage? Or do we need alternative risk transformation, private investors, cat bonds, all these tools that are being developed in many other jurisdictions, but which are relatively underdeveloped in the European Union? So the question is, maybe there will be some light shed on this during your conference. I hope so. Why is the sort of private sector so unengaged? Is it because these risks that we are having in Europe, this is a bit my fear, have become basically uninsurable because the frequency is too high? And of course, insurance is based on the principle that you pay rates for something which happens very rarely, and therefore you can calculate the premium. But if something happens too often, the whole insurance model breaks down. So that's the two angles which we're going to address this from. And then finally, there is a third angle which the European Commission is looking at, and that, of course, is data. Data is the biggest, the treasure trove of data. We have a lot of data in the European Union on exposures, on risk zones, but it's fragmented all over the place. There are municipalities who collect data. Where I live, they have perfect data on our insulation of the house, but who knows, the community next to us might not have it. So the idea, and I'm sure Carlos will mention it also on behalf of IOPA, the idea of the observatory, of an entity which actually consolidates the data and gives you a risk map across the European Union is a project which we're all working on. This is not because we're trying to avoid the hard questions and hiding behind data, but this is because data will actually help us to address those hard questions: how to increase coverage, how to calculate the premium so that it remains affordable, and how then we decide whether we have enough capacity or we need to build additional one. Thank you very much.
Thank you very much, Tilman. Thank you for being with us today. I think your insights gave us a lot of questions to try and address in the sessions of these workshops, of today's workshop, but also for our work from here onwards. So thank you very much again for being with us today. Let me now welcome Petros Kampouris, Secretary General for Natural Disaster Recovery and State Support at the Ministry for Climate Crisis and Civil Protection, to provide his input. Petros, the floor is yours. Thank you for being with us today.
Thank you very much. Thank you very much for the invitation and the opportunity. It's a great pleasure to participate in today's event held in the framework of LIFE IP program, a program which has made an important contribution to strengthening climate adaptation policy in Greece. Climate adaptation is often discussed in terms of prevention, mitigation, environmental planning, early warning systems, and institutional preparedness. These, of course, are essential elements. However, there is another dimension which is equally important: the capacity of the state, the economy, and the society to recover quickly, fairly, and effectively after a natural disaster. This is precisely the field in which the General Secretariat for Natural Disasters Recovery and State Support operates. Our mission is to support citizens, households, businesses, and local communities affected by natural disasters through a framework of financial support, institutional coordination, and recovery measures. In practical terms, This framework includes a broad set of economic support measures. First, financial support is provided to households. The immediate financial support, which includes the allowance for the first basic needs, as well as the financial support for the replacement of household equipment. In intermediate terms, rent subsidies are provided as temporary housing measure. Also, and in most important way, from the perspective of medium to long-term recovery, financial support is provided for the repair and reconstruction of the damaged buildings. From the other side, we provide public support for businesses and agricultural holdings. This financial support concerns the replacement of repair of damaged business assets like equipment, machinery, raw materials, merchandise, stored products, means of production, and other elements of the productive capacity of the business or agricultural holdings. At the same time, public financial support must be fast. Also, it must be reliable. It must reach the real beneficiaries. It must be based on documented damage, objective assessment, and transparent rules. This is why the modernization of procedures, the use of digital tools, the standardization of damage assessment, and better coordination among public authorities are central priorities. Moreover, in the era of the climate crisis, recovery policy cannot rely exclusively on ex-post public intervention. For many years, the response to natural disaster in Greece, as in many other countries, was based mainly on the intervention of the state after the disaster had occurred. The state assessed the damage and provided financial support. The role practically remains necessary. No modern state can withdraw from its responsibility to support citizens, households, and businesses after a major disaster. But the increasing frequency, intensity, and of climate-related risks require a broader and more sustainable approach. Public resources cannot carry alone the entire burden of the disaster recovery. A more resilient model must combine public support, private responsibility, insurance coverage, and risk awareness. This is the rationale behind relevant legislative initiatives promoting private insurance against natural disasters. Regarding to businesses, as it is already referred by Mr. Konstantas, Law 5116 and 5162, both of 2024, established the obligation for all businesses with a turnover above 500,000 euros to be insured against natural disasters. The obligation requires coverage of a substantial part of their assets. A similar policy direction has been followed for the private housing. Law 5045 of 2023, along with 5162 again of 2024, introduced an important incentive for the insurance of residences. This incentive is the property tax reduction by 20% for residences with a property tax value below 500,000 euros and 10% for residences with a property tax value above the previous threshold. Additionally, there is a total exemption from any kind of public financial support due to damages suffered of natural disasters for any residency with tax value larger than 500,000 euros. In the same direction, a private insurance observatory has also been established. Its purpose is to contribute to the preparation of a national strategy for private insurance against natural disasters, as well as to promote the participation of private insurance in disaster recovery. The achievement of the observatory's objectives is entrusted to the Private Insurance Council, a 21-member body composed of governmental officials, local government, and private insurance market representatives. In practice, the legislative framework creates two parallel complementary directions. First, for businesses, it introduces a stronger obligation to insure against major natural disaster risks. Second, for households, it provides and strengthens financial incentives for the voluntary insurance of residences against earthquakes, wildfires, and flash floods. Both directions serve the same strategic objective: to move gradually from a model based mainly on compensation after damage to a model based on risk management before damage. This transition is also essential in the era of the climate crisis. The role of the state is not reduced, it is transformed. The state must continue to support affected citizens and businesses, but it must also create the conditions for a more resilient society. This will be done through better planning, better data, more effective recovery procedures, and a broader culture of preparedness and insurance. Ladies and gentlemen, the challenge is before us. It is clear. Natural disasters are becoming more complex, more frequent, and more costly. Our response must therefore become more integrated, more preventive, and more resilient. Public financial support for households and businesses remains a crucial instrument of solidarity, but this instrument must now be complemented by wider insurance coverage as a tool of risk sharing. The objective is not merely to repair what has been damaged. The objective is to build back in a way that reduces future vulnerability. The Ministry of Climate Crisis and Civil Protection and the General Secretariat for Natural Disasters and Recovery and State Support remain committed to this common effort to protect citizens, support affected communities, and build a more resilient country. Thank you very much for your attention.
Thank you, Secretary General. It is with great pleasure that we have the Ministry with us today. And of course, as also Tilman has already mentioned in his opening remarks, we all as a country remain committed to both mitigation and adaptation. So it is crucial to build the resilience, but also the transition to a low carbon economy. And with that, and to close our opening remarks, I would like to invite now Elena Papaspiropoulou, Director General of the Hellenic Association of Insurance Companies. Elena, welcome. Thank you for being with us today. The floor is yours.
Thank you, Dora. Good morning to all, and thank you very much for the invitation. Before discussing today's topic, let me just briefly introduce our association. We are the representative body of insurance companies in Greece. Our members account for more than 95% of the country's insurance premium production. And our role is to promote and support the development of private insurance within the framework of Greek and European legislation. We provide reliable and timely information to our members. We monitor legislative and regulatory developments, and we conduct market researches and analysis, and also encourage the adoption of best practices across the industry. Let me now turn to the subject of today's workshop. Climate change. Climate change is no longer a future challenge. It is already affecting our economies, our communities, and our daily lives. Extreme weather events are becoming more frequent and more severe. At the same time, insurance protection against natural catastrophes remains relatively low. Globally, around 60% of losses remain uninsured. In Greece, the gap is even wider. Only 1 in 6 homes is insured, while insurance penetration among businesses is estimated at around 40%. Recognizing these developments, our association has been actively involved for many years in initiatives that support climate adaptation, risk awareness, and resilience. Managing the financial consequences of natural disasters is one of the insurance sector's most important responsibilities. It is also one of our key priorities as an association. For this reason, we are committed to contributing to the public discussion on how societies can better prepare for and respond to climate-related risks. Our engagement as an association has started early. In 2015, following the Paris Agreement, we joined the Paris Pledge for Action through our European representative organization, supporting the global effort to reduce emissions and strengthen climate resilience. Since then, we have participated in several important European and international initiatives, such as the Life Profile Project, which aims to strengthen financial security mechanisms under the Environmental Liability Directive through improved environmental risk assessment. Since 2022, we have also been a supporting institution of Principles for Sustainable Insurance Initiative of the United Nations Environmental Programme. Through this commitment, we promote sustainability principles among our member companies and organize studies, awareness campaigns, and other activities focusing on climate-related challenges. We are also actively involved in the international initiatives such as the Principles for Responsible Investment, the PRI, and the Insurance Development Forum. At European level, we participate in the Sotiria project, which explores insurance solutions for 12 vulnerable municipalities in Western Athens exposed to flood and heat risks. And we also contribute to the Natalie project, which focuses on natural-based solutions to address flood and wildfires in Evie Island. Additionally, Following an invitation from the Ministry of Foreign Affairs, we participate in the Southeast Europe Regional Network of Disaster Risk Insurance and Risk Sharing. The network was established under the SCE 2030 strategy, adopted in 2021 by the leaders of 13 economies within the framework of Southeast European cooperation process. Its primary objective is to strengthen the resilience of participating countries to natural disasters through regional cooperation, knowledge sharing, insurance solution, and risk sharing mechanisms. The network brings together 12 countries from Southeastern Europe, as well as Turkey, fostering a coordinated approach to disaster risk management. Internally, we have established a dedicated sustainability committee which focuses on sustainable finance regulation, responsible investment practices, and a broader sustainability agenda affecting the insurance sector. We fully support the objectives of the European Green Deal and the transition towards a more resilient and sustainability economy. As part of this effort, we regularly publish reports highlighting sustainability initiatives undertaken by our member companies. In addition, we have recently completed a market-wide ESG survey covering the years 2024 and 2025. The results will be published very shortly, and this survey records a series of KPIs relating, among others, to environmental performance, human capital, and sustainable investments within insurance companies. We have also recently published, within the support of PRI, the Guidelines for Responsible Investments, which serve an important roadmap for our member companies in integrating responsible investment principles into their investment strategies. Data plays a very critical role in understanding and managing the climate risk. And this is why we have also created the Natural Catastrophes Dashboard. So since 2015, we have systematically collected information on insured property losses caused by catastrophic events in Greece. Through this NatCat Monitor platform, which is freely accessible to all industry stakeholders, users can obtain a clear and an up-to-date picture on insured losses resulting from natural disaster across our country. Another important initiative is our participation in the Life IP Adapting GR program, which is also the reason why we are all here today. So since 2020, we have worked closely with the Bank of Greece, the Ministry of Environment and Energy, and the National Technical University of Athens as part of this important project. Within the program, the insurance market agreed on 7 indicators designed to measure the sector's response to climate-related risks. These indicators include the number of insurers providing natural catastrophe coverage, the volume of claims paid following a NatCat event, the value of insured assets exposed to catastrophic risks, and the number of active policies providing such protection. We believe that measuring these indicators helps us better understand how climate risk awareness is evolving within the insurance market and how effectively our sector is adapting to the challenges ahead. Our involvement in the Adaptation GR is closely linked to the National Climate Change Adaptation Strategy, which identified insurance one of the sectors most exposed to climate-related impacts. And this is hardly surprising. Insurance companies collect and analyze vast amounts of data. We identify trends, assess risks, and develop models that help predict future developments. Equally important, we help individuals and businesses to understand risk and take preventive measures before losses occur, because prevention is often the most effective form of protection. At its core, insurance exists to provide security and resilience. It helps households to recover. It helps businesses to continue to operate, and it supports economic stability after major events. In this context, the insurance sector is not merely exposed to climate-related risks. Rather than it plays a crucial role in mitigating their impacts and enhancing resilience to climate-related events. And this brings me to my final point. One of the greatest challenges we face today is the protection gap. Closing this gap requires stronger cooperation between the public and private sectors. At present, collaboration between the state and insurance in Greece remains relatively limited, yet several European countries have demonstrated how effective public and private partnerships can strengthen resilience and improve recovery after disasters. There are many opportunities for closer cooperation. Insurance companies possess extensive claim management expertise and infrastructure that could support the rapid assessment and settlement of losses after major events. At the same time, insurers could voluntarily share anonymized risk data with public authorities, helping them to identify vulnerable areas, to improve urban planning, to strengthen early warning systems, and enhance civil protection measures. No single institution can address it alone. Success, in our opinion, requires cooperation, information sharing, and long-term commitment for government, businesses, and society. Therefore, I am so delighted to be part of our today's discussion, and I'm very much looking forward to hear also your views. Thank you so much for your attention.
Thank you, dear Elena. At this stage, let me thank everyone for their opening remarks, our Deputy Governor, Theodore Pelagidis, Stavros Konstantas, Tiliman Loida, and Petros Kabouris for participating at this first opening session of our workshop. And let us move straight to the first session of the workshop on climate insurance protection gap and the role of the state. We will have with us to discuss Carlos Gine, Head of Sustainability at EIOPA, Angelos Plataniotis from the Occupational and Private Insurance Supervision Directorate of the Bank of Greece, and Christos Papagiannis from the Directorate of Insurance and Aid at the Hellenic Organization of Agricultural Insurance. We will, of course, try to have also a Q&A, so I would like to invite everyone to submit their questions at the chat box. And I would like also to try and stick to the time. I would like to ask our speakers to stick to 10 minutes each, so we have time for questions at the end. In this session, we will discuss how across Europe we have a fraction of climate-related losses being currently insured. Of course, Greece is no exception to that. We would look at the size of the insurance gap, how supervisors and public mechanisms are responding, and the role that the state plays in that. So, with no further ado, I would like to invite our first speaker, Carlos Gine, Head of Sustainability Unit at EIOPA, to talk about the natural catastrophe insurance protection gap in Europe and present EIOPA's proposals to improve the resilience and EU-level approaches to natural catastrophe risk management. So, Carlos, the floor is yours. Thank you for being with us today.
Thank you very much, and I hope my sound is also coming across clear. Thank you so much for having invited us to this event today, which we are very happy, of course, to see all the efforts and all the progress also that has been done by the colleagues in the Bank of Greece over the last few years. So I have some slides to support my presentation. I'll try to share my screen and hopefully this will work. So I hope you can see the slides.
Yes.
Yes.
Yeah.
Yes. So, and I take, of course, also note of trying to keep the time. So today I will bring a bit of an overview of some of the EIOPA initiatives in this space. I mean, the topic of natural catastrophes, sustainability risks, and in particular, the existing insurance protection gap for natural catastrophes has been a significant topic of focus and a priority for EIOPA over the last years. And it remains a priority going forward because, of course, this is from a risk point of view, remains quite significant. Today, I will focus on the protection gap and mostly on adaptation-related initiatives to see what we have been doing, what are our proposals, but also a bit what are the role of the insurance sector, but not only of the insurance sector, because of course all stakeholders in a sense have a role to play here to address this challenge. Very quickly, just some words in terms of why this matters for us from an insurance perspective. I mean, we see climate change materializing. Europe is a bit in the forefront. We are the continent that is heating the quickest, roughly twice as fast as the rest of the world. You don't need to look very far into the past, just look today. We were hearing Tillman talking about the heat in Brussels. I think in Frankfurt, where we are headquartered, we expect 40 around the end of the week, which is also not so common here, but it's quite an issue in terms of the intensity of the frequency, the severity of the events. This translates into increased losses, increased insurance losses. This is now the 6th year in a row where, globally speaking, losses are above 100 billion. But also in Europe, we see the insured losses going up consistently. And of course, the problem that we see is that there is a significant gap in terms of protection by the private insurance market. And this, of course, means the governments, the overall economy, the households are affected, are at risk by these increasing losses, by this gap. And as climate change materializes, we are concerned that this gap will even continue to widen, as we see some evidence coming across from some recent reports. The next slide is just a few figures, some charts to support this assessment. I will not spend much time here, but just on the left side, you see some figures on the total losses. That's the total bar. And then you have the insured and uninsured portion. So you see in Europe, the insured blue part is only a fraction of the total losses, and you see definitely also the trend going up. The total losses over this period that we are looking at, around 900 billion euros up to 23, now another 14, 24, around a fifth of all of these losses over this period has been concentrated only in the last few handful of years. And then on the right-hand side, you see that the ratio, the proportion of insured losses, according to this source that we are using, at least in relative terms, is also reducing in Europe. So this is a bit where we are. And then what can we do about it? Of course, as supervisors, this is very relevant for us. The insurance sector is in the business of insuring this type of risks that are affected by climate change. So the first step that we took as EIOPA was to try to measure the gap, to move from a kind of more conceptual discussion into a more factual debate. So we have built a dashboard that we have published annually on our website since 2022. And we are actually currently in the process of reviewing more in depth the methodology for this dashboard. And what we do is, for certain perils in the EU by member state, we try to assess based on the exposures, on the insurance penetration, on the risk that exists. We try to quantify the protection gap in let's say, consistent way across member states. So I took for today the picture, let's say, for the situation in Greece, where you can see, as mentioned by previous speakers, that the historical protection gap has been very significant. Currently, the situation is evolving, but you can see that for certain perils, there still remain a quite significant gap. So based on this tool, we then have been working on a number of potential solutions, trying to understand what are the drivers for this situation, both from a demand, from a supply perspective. Of course, in 10 minutes, I am not able to cover all of these initiatives, so I will just focus on a limited sample. One of the aspects that we have been covering is the supply aspect. What can insurance do beyond the discussion about the capacity of the market? Do we need alternative solutions? Are the prices softening or not? Because it's not all about prices, it's also about limits and deductions and exclusions. There's a bit of a bigger narrative to look at. But we have been also looking at a concept that we have tried to introduce, which is this idea of impact underwriting. The fact that insurers, as they do for any other risk, they can actually set incentives for risk reduction behaviors when they design their contracts in terms of the premiums, the deductibles, the limits of the policies. Insurers can incentivize and maybe reward positive risk management behavior by the policyholders. So, of course, then we stumble with this aspect of the awareness, okay? But the policyholders don't buy insurance, which definitely is also an issue. So the slide that I'm showing is actually looking at this, some exploratory work that we have done on potentially developing tools. So this is what we call Protect, a tool that could be designed in a very simple visual way to bring risk information to policyholders. A bit you can do the analogy as we have the energy certificate for the houses. We could think about something along similar lines for hazards like floods, hail, storms, and then provide this information to the policyholders as they buy a house, a property, as they buy an insurance policy. This is a bit the idea behind this tool, that based on the location of the asset, the policyholder, the owner could receive information about its risk exposure, what can be done about it, how does the market operate. So the specificities that we were talking about for Greece, for example, could be informed via this tool and increase a bit the literacy of our European consumers and the awareness for these risks. So this is a proposal, and as my colleague from the Commission mentioned, we are, of course, in ongoing discussions to see how potentially such tools might be brought to life. Then very quickly, of course, the other side of the coin is if insurers would actually develop such products, does our prudential framework in the EU actually reflect these adaptation incentives, this risk reduction behavior? So we initiated some work to look in building in past analysis that we did for certain risks, specifically for the NatCat coverages, how Solvency II actually rewards or not the development of these products and the risk behavior, the risk mitigation that this can bring. And we will conclude on this work by the end of this year. And then finally, just to conclude on a last initiative that was also mentioned, I think in some of the introductory remarks, is this idea that how can we promote, um, how can we ensure that coverage remains available and affordable? Because this is the challenge that we face. We see in other regions of the world, the insurance market retreating, challenging with higher prices, more exclusions when the risks become more severe. So we have been working together with our colleagues from the ECB and more recently from the ESM, building on what exists already in Europe. There are already national initiatives, national mechanism, PPPs. So what we are proposing is something that would build complement and support these initiatives, not to replace anything, to foster and incentivize private insurance penetration, building on risk-based premiums to keep risk incentives and alignment on those aspects as well. But what we see is pooling these risks at a higher level, at an European level, could have incentives. Our latest study showed up to a 67% reduction potentially in risk capital needed to cover the same amount of risks compared to a country by country approach. So this is a bit some work we have published. We have set this ladder approach to really show that every stakeholder has a role to play, and we want to take an inclusive approach, but we need to reduce the burden on budgets, on households, and this could be also a way to do it. So I think I have maybe exhausted or even exceeded a bit my time. We could speak about these topics for the rest of the morning, but I'll stop here. And of course, we will have the Q&A opportunity also to go into some other topics. Thank you so much.
Thank you, dear Carlos. I think indeed we can discuss for hours all the work that the EIOPA is doing on the issue, and hopefully we will have the opportunity of revisiting your work during the Q&A. Let me move straight, for the interest of time, to our next speaker, Angelos Plataniotis, to discuss with us Greece's exposure to natural hazards and the insurance coverage, but also the public-private cooperation and supportive regulatory action. So, Angelos, the floor is yours. Thank you for being with us.
Thank you, Dora.
A quick reminder on the time, please, so
Yes,
that allows us
of course.
time for discussion. Thank you.
Please disturb me if I'm going to exceed the time, but I think I'll stick on it.
Thank you.
Give me a minute to share my screen. I'll be quick on that. Please confirm that you can see my slides well.
Yes, thank you.
Okay, so good morning, everyone. First of all, I would like to thank the colleagues from the Climate Change and Sustainability Center of the Bank of Greece for inviting me to participate in this very interesting and very important workshop, building pretty much on what Carlos said about the landscape on insurance protection gap at the European level. I'll give you in the next few minutes a supervisory perspective specifically for Greece, where we stand today, how we compare with the European average, what solutions are currently being discussed at the European level, and finally, what we are doing as a supervisory authority to help address the insurance protection gap issue. This chart tells us a very simple story that major natural catastrophes are repeatedly generate significant economic losses in Greece, but only a small share of those losses is insured. The blue line shows total economic losses from natural catastrophes since 1980, including both climate-related events and geophysical hazards, such as earthquakes, while the yellow line shows the portion of those losses that were covered by insurance. For the sake of time, I'll not go into detail for each event, but the key takeaway from this slide is that the protection gap is not a recent phenomenon, but it rather has been a serious issue for decades. To make the consequences of this protection gap clearer, I'll mention some recent facts. According to Eurostat, in 2020, Greece recorded the highest climate-related economic losses per citizens in the entire European Union at approximately 91 euros per capita, which is almost 3 times the EU average. In 2021, the wildfires in Evia and other regions of Greece ranked the country among the most affected countries in Europe. But 2023 was by far the most severe year on record. The combination of catastrophic wildfires with the storm Daniel generated economic losses estimated between 2.5 and 5 billion euros, which represents, just to put it into perspective, slightly more than 1% of Greece's GDP at that year. From those losses, only around 400 million euros were insured, leaving the remaining, of course, to be absorbed by households, by businesses, and the public sector. This is a picture that Carlos has already shared with you, so I'll be quick on that. I'll contrast the huge insurance protection gap of Greece, which stands at 4%, with the EU average, which is 27%. Of course, Greece is not the only country that has such a big insurance protection gap, but this is a warning sign that cannot be ignored. And this is why European institutions have been actively exploring new and effective mechanisms for risk sharing. This is also something that Carlos already mentioned. In 2023, EIOPA, together with ECB, come with a first proposal how the insurance protection gap could be addressed, because excessive reliance on ex post public compensation is not fiscally sustainable, and it may also undermine the incentives for risk prevention and climate adaptation. So ECB and EIOPA proposed this so-called ladder approach. The core idea is simple, that catastrophe losses should not fall on a single actor, but should be distributed progressively across multiple layers of protection. In 2024, again, ECB and EIOPA expanded this approach into a more structured dual pillar framework. The key idea here is diversification. Many smaller or geographically concentrated member states do not have sufficient scale to efficiently absorb catastrophe risks on their own. So by pooling risks across multiple countries, losses can be absorbed more efficiently. In April 2026, this is a very recent work, EIOPA and the European Sustainability Mechanism proposed a risk-sharing framework combining a European insurance pool and a public loan-based backstop that could act as a reinsurer of last resort during extreme events. I think that it worth to be mentioned the benefits that the institutions expect to have from such an approach. So that is that the required capital could fall by up to 67%. This is something that Carlos already said. The financing cost of peak losses could decline by around 18%, and the loss volatility could be reduced significantly by approximately 20%, thus improving the cash flow predictability. The protection gap is not only a supply side, but it is also a demand side issue. Research by EIOPA shows that people remain uninsured despite increasing climate risks for several reasons. For example, insurance may be perceived as expensive, or products may be difficult to understand, or others underestimate their actual exposure or assume that the state will ultimately compensate their losses. For this reason, one of our key priorities as a supervisory authority is to strengthen financial and insurance literacy and improve product transparency. Among our activities is to supervise insurance products throughout their life cycle, to ensure fair treatment of customers and the value for money of the product. And I will close by quickly mentioning the main pillars of our supervisory approach on that respect. First, we ensure that the insurance undertakings maintain adequate capital and robust risk management frameworks so that they'll be able to absorb any climate-related shocks. Through the ORSA process, this is the own risk and solvency assessment process that every year the insurance companies undertake. We assess how insurers integrate climate risks into their governance, their stress testing, and their long-term strategy and planning. We also support national coordination efforts, including high-level participation at the Observatory of Private Insurance Against Natural Disasters, coordinated by the Ministry of Climate Crisis and Civil Protection. Moreover, we encourage a transition from the traditional pay and repair approach toward impact underwriting, where insurance pricing rewards risk prevention measures. And finally, we endorse any initiative that can contribute to narrowing the protection gap through sustainable public-private risk-sharing arrangements. And I stop here by saying only that supervision alone cannot, of course, eliminate the protection gap, but it can help create the conditions for a more resilient insurance ecosystem. So thank you very much for your attention. I'll be happy to take any question during the Q&A session. Thank you very much.
Thank you, dear Angelos, and thank you as well for sticking to the time limitations. So I would like to continue straight now to our final speaker of the session, Christos Papagiannis, Head of Insurance and Aid Policy Department at the Hellenic Organization of Agricultural Insurance. Mr. Papagiannis, I know you have quite a few slides you want to share with us. I really do hope that we can stick to under 10 minutes, so that gives us time also for the Q&A. Thank you. The floor is yours.
Okay. Good morning, everyone. Thank you for the invitation. Let me share the presentation. Today I will cover the operation. Okay?
Yes, thank you.
Today I will cover the operations and financial performance of the Hellenic Organization of Agricultural Insurances. Chapter 1 provides a brief overview of the organization. The Hellenic Organization of Agricultural Insurances offers insurance for agricultural production. The organization is a public utility and is supervised by the Greek Ministry of Rural Development and Food. The terms and the conditions governing the payments of compensation are established by Law 3877 of 2010, Crop Production Insurance Regulation, Livestock Insurance Regulation, and State Financial Aid Regulation. Agricultural production insurance is mandatory. All individuals and associations that have full ownership, use, or operates agricultural holdings must apply for an HOAI insurance contract. Eligibility for compensation is required as following: submission of a damage claim, submission of a cultivation livestock insurance contract, timely premium payments. The coverages for crop production insurance are as follows: A, natural hazards, and B, wild animals. The type of damages covered by the livestock insurance regulation include A, natural hazards, B, wild animals, C, animal diseases and accidents. The coverages in accordance with the state financial aid regulation are as follows: A, natural disasters; B, adverse weather conditions; and C, extraordinary events. The organization's financial resources consist of premium payments and the state budget, which cover the operational expenses. The organization has a rich history that spans 48 years. It operates 13 regional branches, each located in a major city across the country, along with a meteorological application center, which is situated at Macedonia Airport in Thessaloniki. The organization employs a total of 387 staff members. Climate impact and financial performance are discussed in Chapter 2. In recent years, the organization has been called upon to address the cumulative consequences of the climate crisis. The most significant climate events include the following. In July 2019, a supercell storm struck the region of Macedonia. In September 2020, heavy rainfall and flooding, known as Iano storm, affected the areas of Thessaly and central Greece. From March to May 2021, frost impacted both Macedonia and Thessaly. In 2022, hailstorm occurring from May to July hit Macedonia and Thessaly. In September 2023, heavy rainfall and flooding affected to as Daniel and Elias storm affected Macedonia, Thessaly, central Greece, and Peloponnese. The financial impact of this weather event is summarized in Figure 1. Figure 1 presents the annual premium rates and the compensation payouts to crop production from 2019 to 2023. The insurance premium increased from 156 to 180 million euros. However, the compensation payouts have seen a significant rise, starting at 195 million euro in 2019. They climbed to 347 million euros in 2021 and reached 458 million euros in 2023. In livestock insurance, there was a surplus from 2019 to 2022, but a deficit of 10 million euros occurred in 2023. The most significant and damaging climate event affecting Greek agricultural production was the heavy rainfall and flooding caused by Daniel and Elias storms in September 2023. Daniel and Elias storm caused significant damage to crop production, resulting in more than 140,000 damage claims. The total payouts amounts to 272.9 million euros, broken down as follows: cotton 141.5 million euros, grapes 39.6 million euros, tree fruit crops 27 million euros, corn 24.1 million euros, vegetable crops 21 million euros, and other crops 19.5 million euros. Daniel and Elias storm caused approximately 3,600 livestock damage claims, resulting in compensation payments totaling 25.2 million euros. The breakdown of compensation is as follows: sheep 11.2 million euros, beef swarm of 8.5 million euros, cattle 5.1 million euros, and goats 0.4 million euros. Out of the total of 298.7 million euros in compensation payments for the Daniel ad hoc program, Thessaly region received 27.1 million euros alone. The compensation payments for crop capital are 34.3 million euros until now. The organization develops and implements programs to help farmers and livestock breeders reduce damage to crop capital caused by natural disaster, adverse weather conditions, or extraordinary events. The duration of implementing the state financial aid program is 4 years. Fires due to force majeure lead to the most significant losses of crop capital. The largest crop capital losses due to wildfires occurred in Peloponnese, Evia Island, and Rhodes Island in 2021, in Lesbos Island, Phokida, Rethino in 2022, and in Evros and Rhodope, Attica, Magnesia, and Rhodos Island in 2023. The financial aid of the FARC's 2021 program was 50.3 million euros, and the program has been completed. The FARC's 2022 and FARC's 2023 programs are ongoing. Chapter 3 is dedicated to weather modification as a form of active protection. An important loss prevention activity of the organization is the Greek National Hail Suppression Program. The program aims to prevent crops from the natural hazard of hail. It is managed by the Meteorological Application Center located at Macedonia Airport in Thessaloniki.
If you would please move a little bit quicker.
Yeah.
Thank you very much. Thank you.
The weather modification use aerial methods in rural, northern, and central Greece focuses on specific areas in Macedonia and Thessaly. The program runs annually from March 20 to September 30. Overall, the program encompasses a total area of approximately 620,000 hectares. In conclusion, the mandatory nature of agricultural insurance is crucial. The agricultural insurance system will be called upon to address increasingly severe and often extreme weather events. Strengthening crop active protection program reduces the risk of production losses and the need of compensation payouts. The organization requires an immediate digital transformation to enhance its insurance services alongside the critical need for strengthening human resource staffing. Thank you for your attention.
Thank you. Thank you very much. Please excuse us for trying to keep the time. I think it is essential that we will have a few minutes to be able to discuss all these issues. So in moving on to our Q&A of this session, I would like to give you the questions that we have from our audience, and also after reading the questions, give you 1 minute each to respond to that. So to you, Christos Papagiannis, the question would be on how the mandatory insurance policy is perceived by the farming community. To you, Angelos, which of the mechanisms discussed today you think are most relevant and feasible for Greece? To Carlos, we have 2 questions. How would the EIOPA's proposals for the protection gap interact with existing national disaster insurance schemes? And we also have a question from Pierre Monin on where does the EIOPA ECB project on a public-private reinsurance scheme and the public EU disaster fund currently stand? What are the positions of the different stakeholders on this? So please, for the interest of time, I will each and everyone give you a minute to respond to the questions. So Christos Papagiannis, let's start with you. Thank you.
Okay, the agricultural insurance provided by the organization is universal, covering key production risks at reliably affordable premium rates. The organization generates significant economic and social benefits for the farming community.
Thank you. Thank you. Angelos, moving on to you. If you would like to tell us about the mechanisms that you think are most relevant and feasible for Greece.
Yeah, okay. Can you hear me, right?
Yes.
Okay. This is indeed a very interesting question. Well, I don't think that the solution lies in choosing one solution and excluding the others. These proposals could be complementary to each other rather than competing. However, for Greece, I believe that the most immediate value will come from mechanisms that improve risk diversification and promote public-private cooperation. Because Greece is highly exposed to a specific set of natural catastrophe risks, mainly earthquakes, wildfires, floods. So a broader European risk-sharing arrangements could bring benefits by spreading risks across a larger and more diversified pool.
Thank you. Thank you, Angelos.
Thank you.
And Carlos, moving on to you.
No, thank you so much for the questions. I think I can answer them both a bit together because they are very interconnected. So as I mentioned in my presentation, our proposals, and in particular, I think the focus of the question is on this work we've done with the ECB and the ESM on pooling and public-private partnerships. Our intention is, of course, to, as I said in my presentation, to support the mechanisms that already exist. The problem is that currently we have a bit of a panoply of different situations, different regimes. Some member states have more developed, others don't. The size is different and so on. So our intention would be to develop something that can help lower costs, promote coordination, incentivize adaptation, building and helping the mechanisms that are already in place. Now, this links to the last question, which is again on the EIOPA ECB ESM discussion papers. Where do we stand? So of course, EIOPA is a technical body, ESM, ECB. We are, of course, making technical proposals on a topic that we think is important and could have a beneficial impact. We know there are different views on the topic, but ultimately the decision, of course, lies with decision makers, with the political level. So from our side, we stand ready to continue supporting with technical analysis. But of course, we cannot ourselves take the decision to implement such mechanisms. In terms of the positions, I think some are public, some have published papers on the topic. We know there's a general view, I think, from the industry that there is capacity to a large extent, and some of the features of the proposals we are bringing together might not be necessary in their view. Of course, other stakeholders, I think I would leave to them to express their view. We believe this is relevant. It could help and have an important positive impact in affordability and availability and reducing the protection gaps that we have today. Thank you so much.
Thank you. Thank you, dear Carlos. And thank you all for participating at this first session. Let us now move straight to the second session of our workshop. In this second session, we turn from the scale of the challenge to the range of the responses. So we will be focusing on insurance products, schemes, and case studies that are intended to support the resilience of households, businesses, and societies. So we would like also to invite the audience to submit questions and comments through the chat box. Hopefully, we will have the option to discuss more during the session at our Q&A. And for that, I will try to ask everyone to stick to their times. We have with us for this second session, Nicolas Zamar, Head of Personal and General Insurance at Insurance Europe, Amar Rahman, Global Head of Climate Resilience at the Zurich Resilience Solutions Commercial Insurance. We have Jonathan Cassian, Head of Research at Flood Re, and Kelly Hadjidimitriou, Director of Legal and International Affairs at the Hellenic Association of Insurance Companies. I'm pleased to welcome all of you and give the floor now to Nicolas Zamar, our first speaker for the session, who will provide us the broader European industry perspective. Nicolas, thank you for joining us today. The floor is yours.
Thank you very much, Dora. Very nice to be with you today. I'll try to share my screen. I think that, yes, thank you. There was someone else sharing the screen. This should be it. I hope it's working.
Yes, we can see them very well.
Very good. So again, thanks very much for the opportunity to be here today. And indeed, I would like to try to give a European perspective on the question of how insurance can contribute to climate adaptation and resilience. And I would like to focus on three parts, really the general context, scene setting on insurability in a changing environment. I will be short because other speakers before have already commented on that. A focus on prevention and resilience, and finally say something about what we are seeing across Europe in terms of national approaches, public-private cooperation, and the discussions that are taking place at EU level and across Europe. Let me start by the first point, and this is really figures that have been shared by others before. We are seeing across Europe and also very clearly in Greece, climate-related risks becoming more frequent, more severe, and in many cases more complex and interconnected. Heat waves, wildfires, floods, storms, and droughts are no longer events that can be treated as exceptional in many cases, or we are moving into some form of new normal. And I think other people have commented on the current heat wave, which is absolutely unprecedented in a country like Belgium, especially at this time of the year.
Nicholas, if I may ask you that you move your presentation to the full screen so we better see.
I thought it was. Apologies. I thought it was. Sure where it should be. Yes, okay, sorry for that. Apologies. Thanks very much for pointing that out. So these are figures from Swiss Re showing the extent of losses globally and the extent to which they are covered. So around 40%, as Elina mentioned, are covered by insurance. So there is a 60% protection gap, and as we know, the protection gap is on average higher in Europe. I think it's important to mention that climate change is not the only factor that come into play when it comes to economic losses. The value of assets and also where we build are also significant factors. But of course, climate change is having an impact on, as I mentioned, the severity and the frequency of events. It's also very important to mention that across Europe, there are differences. Climate change is affecting the whole of Europe, but exposure to natural catastrophe risks nonetheless varies widely from one country to another, whether we are talking about floods, heat waves, wildfire storms, or of course coastal erosion, or earthquakes, which are affecting some countries and are not affecting others. When it comes to the protection gap specifically, there is a wide range of factors that come into play, such as the country's risk culture, their traditions, the education of the people, or their risk culture themselves, as well as whether there is a specific public partnership in place. So this reality of more frequent and severe events happening across Europe raises fundamental questions for the sector, and whether and to what extent insurance can continue to be available at an affordable prices for certain categories of risks, for certain categories of people. So how to ensure that coverage remains available and affordable for the significant majority of people across Europe? This is really the key question to be looked at. And this brings me to my second point, which is on the role of prevention and resilience, which I would like to stress a bit. So I think it's important when it comes to insurance to really keep in mind always that in its traditional role of risk transfer, insurance comes at the end of a chain. This means that whether something is insurable or not, and at what price, will be determined by decisions that are taken earlier in the chain by other stakeholders. So we have summarized this by this graph, which is we call the triple resilience approach, to really show that risks need to be addressed at different stages, and insurance is only part of that broader continuum. So the first stage is really around avoiding risks or reducing risk exposure. This is about decisions regarding land use planning and hazard mapping. In other words, not building in areas that we know are highly exposed, for instance. The second stage, also relating to prevention, is around reducing risk or reducing the vulnerability, meaning that prevention and property protection measures, for instance, building standards, flood defenses, or wildfire prevention. These measures are key to reduce the impact of an event. Then there is the fundamental aspects of intervention in case of an event. For instance, a wildfire of a flood. We know that how fast an intervention is taking place, and that's certainly the case for wildfires, can really make a big difference in terms of the extent of the losses. And finally, of course, there is the point on risk transfer, which is where insurance comes in. And then there is an element of residual risk because some of the risk cannot be transferred, reduced, or avoided. But the whole idea is that we need to make efforts in the different phases of this graph. As I said, a lot of what has to be done in prevention intervention is linked to decisions that are not taken by insurers themselves. They have a key role to play as advisors to their policyholders in terms of how to reduce risk exposure, how to increase resilience after damage, also, for instance, through building back better approaches, but also advice to policyholders through the capacity that insurers have in terms of access to data, risk modeling, etc. One aspect I would like to mention, because it was being referred to by Carlos, is this notion of impact underwriting. So the ability that insurers can use insurance, their policies, to incentivize prevention approaches. I think this is a tool that can be used, but we also need to be realistic. Very often, the amount of work that needs to be done, for instance, to protect the house better, are significant compared to the value of the premium. So while it is something that is widely used for corporate clients, for instance, it is more difficult to use on a wide scale for households, for instance. But that doesn't mean that nothing can be done in terms of prevention. Quite the contrary, and certainly it's something to look into. And that leads me to my third point, which is where we are seeing what we are seeing across Europe, in terms of approaches, cooperation, and EU discussions. And what I see very clearly is that discussions and reflections similar to the discussions you are having in Greece are happening more or less all over Europe in terms of how to reduce the protection gaps. And in particular, discussions on public-private partnerships, which are in existence in a number of countries and are being discussed in terms of being introduced in other countries. And what I think is important is to see that there is a wide variety of solutions that are in use. So just to give a brief overview, we have, for instance, the example of the Spanish consortio, which I think is very well known, which acts as a primary insurer of extreme events with specific features such as mandatory insurance for those who buy fire insurance, but also the fact that it covers not only extreme natural catastrophes, but also other perils such as terrorism risks. In other countries, such as Belgium, the role of the state is to provide a backstop in case where particular events reach a certain level of losses. Yet a different system is Flood Re in the UK, where the idea is to help specifically the households at high risk of flooding. And in other countries, such as Greece, for instance, there have been policy developments aimed at strengthening resilience by increasing insurance penetration. What I would like to point out is that from my point of view, all these systems have their merits. So there is no one-size-fits-all solution. There is no one perfect solution that should be implemented all over Europe. But it's important to develop systems that are coherent with the specific situation of a particular country. And what I would like to stress as well is that in the majority of countries, there are no such schemes in place. And there are cases also where insurance penetration is nonetheless very high. So it's also an option. But what we see everywhere, and I would like to echo here comments by Elina earlier today, is there is a growing recognition that closer cooperation between the private and the public sectors is needed. And discussions are taking place everywhere about how to join forces, whether through PPPs or through other forms of risk sharing. I would like to very briefly say a word about the work of EIOPA, especially the recent paper on that EIOPA did with the ESM, because there have also been questions on that. And I think that what I would like to say is that from our perspective, we share the objective of strengthening resilience and reducing protection gaps. And I would like to say that we have published, in fact, yesterday, on time for the webinar, or paper in response, if you like, to the EIOPA ESM paper, where we, of course, support the reflection on what to do to strengthen resilience and reduce protection gaps. But we also said that it's important to be clear about the nature of the problem we are trying to address and the solutions then that are being brought forward. And one point that has been mentioned by Carlos, by Tillman earlier today, is whether we are having a capacity issue and whether we are trying to address that capacity issue. And from our perspective, there is currently, in any case, no problem of capacity. So because we have enough capacity in the sector. And so we need to be careful about not trying to address that particular point, because that means that approaches which focus mainly on risk sharing at European level with increasing capacity as a main focus can only provide part of the answer if the underlying risks are not addressed at the same time. So while there is very clearly a role for action at EU level, particularly in terms of data sharing, coordination, and sharing expertise, and we very much believe that the upcoming European Commission Climate Resilience and Risk Management Framework can be a real game changer, these efforts will only be effective if they go hand in hand with stronger action on prevention and resilience, which will depend on appropriate measures being taken at national, regional, and local level. So in that sense, European initiatives should be seen as complementing national approaches, which remain essential and need to reflect national realities. And I would like to conclude with one quote, famous quote, I think, by John Holdren, who was advisor to Barack Obama. And I think that quote dates back to 2012. Where he said we basically have three choices: mitigation, adaptation, and suffering. We are going to do some of each. The question is what the mix is going to be. The more mitigation we do, the less adaptation will be required and the less suffering there will be. It's in the end echoing the comment of Tillman that we need to not forget to also focus on mitigation in the sense of reducing emissions. And I think for the last couple of years, we are starting to see what suffering means, and so let's do our best to reduce emissions and also adapt accordingly. Thank you very much for your attention.
Thank you, Nicholas, and thank you for concluding with with the insightful quote that kind of rounds up and summarizes what our approach needs to be in this climate crisis context. So let me move straight to our next speaker, Aman Rahman from the Zurich Resilience Solutions. Amar will talk about Zurich's approach and the role for insurance in guiding a cost-effective resilience investments. So Amar, the floor is yours. Thank you for joining us today.
Thank you very much, everybody, for the kind invitation. I'm trying to master Zoom at the same time as speaking. I hope you could see my
We will soon, I hope, as well. Are you sharing your screen or your presentation?
I'm sharing my presentation now. And it says it's sharing. Let me try again.
Let's try again.
Okay. I am used to Teams. Of course, everything worked before.
All platforms are unique, so we have to master them all at the end.
Let me see if I could.
Maybe if you share your screen, would be easier to have the presentation uploaded on your screen.
No.
Still not.
I see something is being shared from my screen because
Shall we do it ourselves from the technical team?
please.
Yes, let's do it this way. You can start a cappella and we'll
Okay. Well,
share it as soon as possible. Thank you.
great. As the presentation is being uploaded, and apologies for this, I'll try to build upon the excellent presentations of the co-presenters here, and try not to overlap. Basically, Zurich's Resilient Solutions, we are the advisory arm within commercial insurance of Zurich Insurance. Precisely, we were conceived 6 years ago, precisely to meet the challenges that many are facing around adaptation. To build on what Nicholas showed previously, on the triple protection approach, what we look at is the prevention and intervention measures to reduce the risk that you transfer to a minimum. And through my presentation today, I'll try to share with you some of our experiences and challenges in implementing, in communicating, implementing, and assessing these risks. Sorry,
Amar, we can now see your presentation.
Okay, excellent. So if we go to I can't see it, by the way. So if you go to the first slide, explaining our framework. Now, this is probably self-evident, but when we talk about natural catastrophes, extreme weather, climate change, we conflate hazard with risk. Yeah. So the first question we get asked is, am I in a very high flood zone, in a heat wave zone, earthquake zone? But that's not the risk. Key to understanding the risk is mapping the value chain, and that's the exposure. So what we do as a first step is understanding what the pain points are in the value chain of the system that we're analyzing. The second step would be to look at the triggers that could impact those pain points, and then finally look at the controls in place. Now, this is a rather simple framework, but it defines everything we do, whether we're assessing extreme weather, natural catastrophes, whether it's cyber risks, whether it's construction risks. It's a consistent framework where it also defines what data we need to bring in each step of the analysis. Now, key in the output is quantification of the impact. Yeah, and in the insurance world, what we tend to do is communicate that in terms of property damage and associated business interruption. In our discussions with banks, with equity firms, with different stakeholders, we've been the damage avoidance is not a key driver in providing funds for adaptation measures. We communicate that through the insurability index. So at portfolio level, what does this mean at the site level? What does that mean to your overall insurance policy? But also in parallel, what does that mean to your balance sheet in terms of operations, in terms of asset value, and so on and so forth? Yeah. So if we go to the next slide, please, on climate stress testing. Just as an example, and this is a very high level representation again, we show how we would do a climate stress testing when working with a bank. Yeah. So we translate the physical climate risk assessments into financial credit impact by converting the financial quantification model at at asset level, the physical damage in business interruption, into inputs that the credit model could use. The key point here is the aggregation, because what we could do is at a very granular asset level or site level shock, aggregate this back up to the borrower and portfolio level. And that makes the results useful, whether it's for underwriting, for risk management, and capital decisions. Finally, the output we try to align with standard credit risk metrics like probability of default, loss given default, expected credit loss, and so on. So that's one example of how we would do this with banks. Now, if we go to the next slide, please, and I'll show a little bit the overlap between what we do from an insurance perspective and then from a systems perspective. So this is just one example of a damage after a hurricane. And what you see, the red label is the year of construction for each building. And the point of this was from this is, by the way, a slide from a standard committee presentation, building standards. And what they were trying to show is that the house built in 2020 is resilient. It withstood the hurricane because it was built to the 700-year wind event. Now, from an insurance perspective, this is a good risk because there was no damage, there was no payout, and everyone is happy. But if you look from a systems perspective, the recovery time for this community is quite long until you get the infrastructure, until you get the utilities back up and running. As was mentioned several times, these kind of events are becoming more and more frequent. So the policy conditions or the availability of insurance for this whole region is getting a little bit more stringent. So we need to move away from that asset level focus to a wider systems-based approach. And if you move to the next slide, I'll give you a little bit of an indication of what that means. So looking at that single asset on the right-hand side, and assuming this is a production facility or a house or whatever, a systems-based approach to the assessment means that looking at everything related to the operation of that asset. So what type of energy is being supplied to that asset? And in this case, it's the wind farm. When that wind farm was constructed, you look at the port, which is critical to getting the raw material to that asset. We look at the bridge. We look at where the water treatment is coming from and the condition of the adjacent facilities, of the neighboring facilities. Now, each one of these elements that I mentioned has a different materiality. So the material risk to each one of these pain points is different. For example, heat would impact the efficiency of the water treatment plant. But when we look at it from a facility perspective, it impacts the well-being of the workforce and so on. Yeah, when we have these kind of discussions with the insured and map out the value chain, they could influence the adaptation measures at site level. But when you look beyond the asset, when you look at the infrastructure and the utilities, this is where the discussion with the public authorities is important. The results of the analysis that we do feeds into these discussions because the local authorities need to be aware of how these effects, how these climate change effects or extreme weather effects could impact the efficiency and the effectiveness and the reliability of their facilities. If we one note I'd like to highlight, you see here that the houses on the left-hand side, the informal settlements. If you skip 2 slides on, in the interest of time, I'd like to highlight how we incorporate these aspects into our assessments. What you see here is an example of informal settlements beside a river. They dump all their garbage into the river, and you see on the right-hand side a bridge. Yeah, that underpass under the bridge is the local flood protection mechanism. This is the drainage system at site level that channels all the surface water out of the city. And you see the garbage from the local, from the informal settlement has collected in front of this flood protection system, rendering it ineffective. Yeah. So these type of effects, they are not reflected in global or regional hazard maps. Yeah. So we get asked a lot around the hazard part of the risk trifecta, that there's a lot of scrutiny or a lot of questions around resolution of data, granularity of data, and so on and so forth. But we tend to focus on the exposure and the controls part of the risk assessment. that there is always uncertainty around the hazard data. And what we try to do is reduce that uncertainty in our analyses. We are very transparent. We explain the uncertainty around the hazard data, but the focus in the risk assessment should be around the exposure and controls, because these are aspects of risk that are tangible and that can be assessed quite easily. Finally, if we go to the last slide, the risks are interconnected. Yeah, we tend to think of flood, of wind, of heat as discrete, as separate, but they are interconnected with each other. Yeah, the example that was mentioned at the opening of this webinar on rain, intense rainfall. You know, if you think about these current conditions, how soil becomes very hard and compacted, any rainfall will result in intense surface runoff. So there's an interconnection between the risks. Following such cycles of drought and intense rainfall and so on, you notice a subsidence, soil subsidence that impacts buried infrastructure. So risks are interconnected and not discrete, which is difficult to communicate in a tool, but you need to go further in the analysis through development of scenarios in the short, medium, and long term under different climate scenarios. History is not a good indicator of the future, and that's not only from a hazard level perspective. The environment is changing. Yeah, there's more urbanization. Critical infrastructure is being overloaded beyond its design capacity because the infrastructure was built 30, 40, 50 years ago, and you see increasing development above ground without improving the infrastructure below ground. So history doesn't give that. Doesn't give a good indication what could happen in the future. The third point, which I mentioned, climate and environment. Yeah, it's the environment and not only the climate that's changing. And finally, and this is crucial from an insurance perspective as well. We think in the context of the asset that we insure, but the trigger for a loss could happen outside the boundaries of the site. Yeah. If you think of energy, for example, a lightning strike or increased demand for energy could impact the substation, which is outside the influence of the insured, but the insured's operations could be impacted by that event. So it's important to understand the entire value chain and prepare for it accordingly. I hope I was in time. That concludes my presentation. Apologies for the technical issues I had previously.
Thank you, Mara, and thank you for bringing your practical insights into today's discussion. And thank you also for all of you for your patience, because it seems that we will be running a few minutes late. So I would like now to invite Jonathan Cassian, Head of Research at FloodRed, to present the UK public-private schemes. Jonathan, the floor is yours. Thank you as well for being with us today, and thank you also for sticking to your time.
Great. And let's see if my screen shares, and I'm setting myself a timer to make sure I'm on time. So has that displayed?
Yes, excellent.
Great.
Thank you
And
so much.
actually, as of this week, I'm head of flood resilience. My title and role have changed to focus on some of the things that I'm going to be covering in this presentation. So FloodRe is the UK's public-private partnership. We have a kind of dual mandate. We are a standard protection gap entity providing a vehicle that can be seeded into, so providing subsidized reinsurance for policies. But we also stop existing in 2039. We have a time-limited mandate, and that is done in order to create the incentive for us to fix the problems by the time we exit the market, so that we can go back to a market that functions without protection gaps. We were created because of floods in 2007, affected over 50,000 people across the country. And what you saw after that is certain regions that were affected. About half or more of people couldn't get any insurance, and those who could were paying high prices, 5,000, 6,000 euros per year. The way the scheme operates is that we act behind the market. So there's a levy that is collected across the insurance market. If a company has 10% of the insurance market, they pay 10% of the levy, and that goes towards subsidizing the coverage and so insurers can decide which properties they cede to us. They can send us anything they see fit. So it's up to the market to decide how they use the program and what they cede to us. It results in actually one of the lowest protection gaps. I think we're just after Norway and Denmark, about 20%. So we've got about 80% coverage. And in actually the household market, it's 95% of owner occupiers. So, like England is the UK is the birthplace of insurance, and so there's extremely high penetration. We sit in amidst all the insurance companies, but it's something that is kind of widespread, and that creates a large poolable market, which actually supports this. We've also been really lucky. So the first decade, the decade before Flood Re, 2007 is that event I showed. There was quite significant events, even by today's standards. And then the decade that Flood Re has existed has been relatively quiet. And that may be down to the bargain that was struck. Insurers pay for Flood Re, and they set up Flood Re as part of an agreement. Government pays for flood defenses, and in the last decade, they've paid more and more for flood defenses, going beyond $1 billion a year. It's probably about 1.6 billion euros this year investing in flood defenses. And it looks like they've done a really good job. I mean, we just had a really wet winter, one of the wettest on record, and there was less than 1,000 flood claims. So that's really quite a good track record. I mean, it won't stop big multi-decadal events from happening, but what it's really doing, it looks to be, is removing those residual, the attritional risks, the kind of year after year flooding. That being said, we do have across our book a number of those properties that do flood repeatedly. So about 10% of our claims are repeat flooding properties. And it's really transformed the market. So before Flood Re, people paid, I'd say, about £5,000 for their insurance. That really came down overnight. As soon as Flood Re came into the market, there have been some changes since. Prices have gone up, but still pay well below the market. So the average price of insurance about just over £400 in the UK. And actually, Nicola made a really good point. That isn't enough to incentivize action, getting a discount on that. However, if you look at, so we calculate that without Flood Re, the price would be about 11,500 euros. And as we move towards 2039, if that's the future expected price, then the move towards that provides some incentive to start implementing discounts to drive action. So these are our commitments towards the exit from the market in 2039. I'll talk about these in sequence. Build Back Better is probably our flagship program. So after a flood, we provide an extra £10,000 to rebuild with resilience measures. So floodgates, things that will keep water out of the property and make that property more resilient over time, prevent damage from flooding in the future. About 70% of the UK home market now offers it. So we launched, it's been 4 years in place. It's been a relatively quiet year, so we haven't seen as much. But overall, we only actually see about 1/3 of the eligible properties taking up Build Back Better. And that's something we know needs to change, and we're putting those changes in place. There's a variety of reasons. It's a little bits down to the homeowner, a lot more is probably down to the supply chain and the way that it gets communicated, the speed of which people are making decisions, because it is quite a new thing. People are unfamiliar with it versus as are the people on the ground, the trades. They sometimes run into new and novel questions. How do we do this new technique? So it's actually been a lot more difficult than we thought to get it in place. So we've launched training modules 2 years ago, and this year we've provided kind of technical support forum where people can, when they're having questions with claims, so this is actually for insurers, to come to us to be able to answer technical questions. And the context for that flood resilience in the UK is a lot of the housing is sort of is quite it's expensive, but sturdy, a lot of brick building. Not all of the UK looks like this, but a remarkable amount actually does. And these properties, if you think about the flood at the beginning, shallow flooding, 20 centimeters, is actually quite defensible. And we're seeing claims of 60 to 90,000 pounds. So really, what can we do to keep the water out, to keep these claims down? So, this sort of protection where you put a gate across is kind of, the core of BBB in a way. It keeps water out of the property. There's no way of tracking it right now. And then there's a lot of modifications people make to their home that are for beauty, livability, but actually do increase risk, not necessarily tracking that. And then something that's common on properties here, these air bricks to let it ventilate because it's a very damp, cold climate, more so not today, it's about 35 degrees and sunny, but through the winter, it's that, and people can protect those because they actually provide an ingress point. A lot of flooding actually happens through those. And so when they're doing those modifications, thinking about how to do that. I should also say, actually, those contexts can be different and possibly would be different. When I was doing an exchange in California, they have something that looks very similar, but it's actually designed to let water through the building because often it's built on slopes. You have flooding coming down a hillside, and so you actually have a vent. It's called the same thing. It's a vent, but it allows water through. So, it's the modifications are bespoke for every different circumstance. So we've also come up, in addition to Build Back Better, with flood performance certificates. So the key there is giving householders visibility on their risk, to allow insurers and mortgage lenders to have a sense of what that risk is. And it also is starting to track the building standards. So where things are being built as specified, that'll show up in an FPC. This is a new thing. We are basically developing it modeled on the energy performance certificate, but FloodRe has been tasked by the floods minister in the UK to have this piloted by the end of the year. So that's my day job. That's what I spend most of my time on. And we've worked through the standardization process over the last year, and we've come up with basically something that a householder can do. Take an app, go around your house, look at the one data point that isn't in place is actually where can water get into your home? What is the lowest point at which water can come in? Because we've got great flood maps that say, here's where the flood is expected, but there's very little information on the house itself and whether that house is going to be made resilient to flooding. And so we've come up with these kind of tiers. One is something a householder can do. The other one is you take photos, you send it in, it gets checked on a desktop by a professional. And the third is the thing that happens in the insurance process where a surveyor comes out on site and actually does a survey. But those can be used for increasing levels of complexity of the home and increasing levels of flood risk. So we're piloting by the end of this year. The other thing that we've been doing is testing low-cost interventions. Turns out tape actually works really well. We're doing these tests right now. We collaborated with the university to build a flood tank where we can set up doors and see what they flood, see if they're resilient to flood. And we went and we taped them, and it actually works far better than sandbags, which are extremely heavy, difficult to deploy. So, for a local authority emergency response, someone can actually really protect their home a lot better with a roll of tape, the right kinds of tape, and we're going to put out this report in a couple of months, than they can with sandbags. So there's actually things that householders can do, and that might exist in the space of, versus 10,000 pounds to retrofit your whole home. Doing something really simple like this is something that is achievable. So that's it for me. I was going to mention actually the wildfire standard, because wildfire did come up, and we modeled a little bit of our system on the system that's in place in the US, where you go around and you check 5 feet of defensible space around the home. So I thought, given the context of wildfire, there's a similarity there in terms of you can do this with an app, and that's what the US is doing to kind of restore insurability of places like LA. But that's it for me. Thank you very much for your time. Now I'll stop sharing.
Thank you so much, dear Jonathan. It has been very interesting to see these practical examples, also with the photos that you showed us of the solutions presented. So with no further ado, let me give the floor to Kelly Hadjidimitriou, Director of Legal and International Affairs at the Hellenic Association of Insurance Companies, who will give us an overview of the domestic market. Kelly, please, the floor is yours. Please, if you can, keep the time and maybe even shorter so that we don't
I will
go
try
too
to
much
be
beyond. We are close to finishing, but I think it will be very good if we manage to get some questions at the end for this session as well. So thank you, Kelly. Thank you.
Yes. I will
Please close your sharing.
Oh,
screen.
yeah.
Jonathan,
Sorry.
could you please?
Okay.
Yeah, I don't seem to have
screen.
the button. I've been looking for the button. It's
Okay.
on the, sorry about that.
No problem.
Ah, there it is. It's on a third screen. The stop share is, my apologies.
Thank you, Jonathan. Thank you.
Okay.
Kelly, the floor is yours.
Okay, hello everyone. I will try to be, no worries, to be short. First of all, I would like to thank the Bank of Greece for the invitation, and particularly Mr. Tonakaki for bringing us together today to discuss such an important topic for our country. Before moving to the main analysis, which was to some extent covered by Mr. Kampouris, the Secretary General, let me briefly share a few figures of the scale of the challenge we are facing today in our country. As an insurance market, we often say that climate change is no longer a future risk. For Greece, it's already a present reality. Our country faces a unique combination of natural hazards. On the one hand, we are witnessing increasingly severe floods and wildfires. On the other hand, Greece remains one of the most seismically active regions, not only in Europe, but globally. As a result, households, businesses, and mostly public finances are exposed to growing sources of catastrophic risk. At the Hellenic Association, we have been systematically monitoring and recording the impact of catastrophic events since 1993. Over these 32 years, we have recorded 59 major catastrophic events, resulting in more than 56,000 insurance claims and compensation payments exceeding 1 billion euros in today's values. During the last 5 years, climate-related disasters have become both more frequent and more severe. Every year, Greece experiences between 3 and 5 major floods or wildfires with significant economic consequences. The most important are floods, as they account for almost 2/3 of all insurance compensation paid for catastrophic events. Wildfires, on the other hand, are often the most destructive events. The year 2023 was a turning point. Why? Maybe the Greek audience have already the answer. The Daniel and Elias storms. These catastrophic storms, the major wildfires in Volos, Attica, Mrs. Papagiannis also mentioned, was mentioned to the specific catastrophic events that happened during the very same year, generating insured losses of more than 439 million euros. And this was the highest annual amount of catastrophe-related compensation ever reported in the 23 year of our survey as a market. However, these figures tell one part of the story. They represent insured losses only. Apparently, the actual economic losses were significantly higher and were ultimately borne by households, businesses, and the state, apparently, through state aid payments, even with delay or even partially. This brings us to what is perhaps the most important, or one of the most important challenges for Greece today, the protection gap. Despite the increasing severity of natural disasters, insurance penetration remains relatively low in Greece. For many years, a combination of limited risk awareness, expectations of generous state compensation, and the perception that insurance is something expensive contributed to this gap. However, the catastrophic events of 2023 served as a wake-up call for all of us, the Greek people, Greek society, but mostly for the state. The Greek government stepped in taking important measures to strengthen resilience and encourage insurance coverage. Let's look at them very briefly. The one bunch of measures concerns tax incentives. Mr. Kapouris mentioned the specific measures, so I will skip this part. The only thing that I would like to add is that the specific tax incentives have delivered results with the coverage rate increasing to 18.9% from 15% in December 2024 and in 20.5% in December 2025. However, we do believe that there is room for improvement. Following government invitation, we are currently working on finalizing our proposal for the establishment of mandatory insurance coverage for all houses across the country. This is still a work in progress. At the very same time, a further expansion of existing tax incentives, let's say an increase in the FIA discount percentages, would be beneficial as well. At this point, I would like to note also the role of banks that can be critical as well, in the sense that they can ensure that properties that for which they have granted loans have all three required coverages. The second measure that was also mentioned by Mr. Kapouris concerns what? Concerns the establishment of a requirement for all businesses with a turnover exceeding 500,000 euros to be insured against wildfires, floods, and earthquakes, the very same earthquakes, NatCat risks. According to the Elstat data, mandatory NatCat insurance for businesses concerns more than 50,000 businesses. More specifically, Law 5162 of 2024 predicts the obligation of the specific companies to cover, as of the 1st June of 2025, at least the 70% of the total value of owned, not the rented ones, buildings and other assets such as equipment, raw materials, goods, professional vehicles, machinery, stored products. Non-compliance results in an administrative fine of 10,000 euros, which doubles if the business fails to comply within 30 days of notification. A few days after the entry into force of the specific law, a ministerial decision was issued to clarify several areas of its content. The most significant one, I would say, is the procedure by which companies struggle to find insurance in the open market can be fully or even partially exempted from insurance. To be more specific, if one company receives at least 2 negative responses from 2 different insurers for all 3 perils, that specific company can be exempted from insurance requirement. This exception is full and stands for 2 years. After this 2-year period, if the enterprise receives again 2 negative responses from 2 different insurers, the exception becomes permanent. Moreover, according to the decision, where specific risks or asset components cannot be insured from the open market, the company is exempted accordingly for the specific risks or the specific asset component, even if the threshold of 70% cannot be met. The ministerial decision provides further that DMEA is the competent enforcement authority. From our contacts with DMEA, it seems that some inspections were made on an ad hoc basis already, and at least 1 fine has been imposed. The measure has already encouraging results. We estimate that approximately 40% of businesses are already insured. These are positive developments, of course, but the journey is far from complete. For example, we do believe that the threshold of 500,000 euros must be lower to cover smaller companies which have a greater need to get insured. To conclude, I hope that it was short. To conclude, resilience is for our market a complex issue. It cannot be approached in a simplistic way, and it requires cooperation between the state, as stressed out by Nicholas or Jonathan, the insurance sector, private entities, businesses, and citizens, of course. Thank you very much for your attention.
Thank you, dear Kelly, and also thank you as well for trying to keep it short. That would give us a few minutes to move with questions. So if I may, I will give the floor to each and every one of you in this second session with a question, and I'll give you another minute or two to discuss the question. So to you, Kelly, in your view, are there any insurance solutions so that all businesses are protected in the Greek context? To you, Jonathan, has the flood performance certificate been done elsewhere? To Amar, what are the key challenges that companies face in understanding the risks? And to you, Nicholas, in practice, what is holding back higher insurance coverage? So first, over to you, Kelly.
Okay, thank you, first of all. We don't think that the current framework regarding exceptional businesses is something that can be considered as sustainable in long term. We do think that when the next major catastrophe event happens, the state will have to revisit the whole issue and the whole until today approach. As a market, proactively and taking into consideration the European experience and practice and good practice, we are working now currently on a market-wide co-insurance scheme in order to cover all these high-level risks, the risks that are currently exempted from insurance requirement. This is an issue that is very major for us, for the reputation of our market, and it's a work in progress. Shortly, we are going to have more details about its content.
Thank you, Kelly. Jonathan?
Yeah, the short answer is no. I mean, there's no flood performance certificate that we're aware of. We modeled it on the energy performance certificate. In the Netherlands, there is a water label for homes, slightly different. And in the US, there is the wildfire insurance Building and Home Insurance Institute for Building and Home Safety. That was the one that I showed, the 5 feet of defensible space. So there are other models out there in other parts of either catastrophe, hazard, and insurance. But we've had to really develop from the ground up the FPC methodology. So, yeah.
Thank you for that. And we're looking forward to seeing how the scheme and the certificate will evolve as well over time. Amar, over to you.
Thank you. Yeah, actually, the challenges we see at corporate level are the same that we see in the public sector and in other areas. Basically, the lack of a consistent risk assessment methodology, the misalignment internally within different functions on the view of risk, and the availability of data and how to assess the quality of the available data.
Yes. All these are definitely challenges, and hopefully we will have more alignment in the years to come. Nicholas, over to you. So in practice, what is holding back higher insurance coverage?
Yeah, thanks very much. It's of course a very good question to wrap up the discussion. I think what today's webinar has shown is that there is no one silver bullet. So we need to work on various fronts. It has one important point, as you mentioned, is awareness of risk. We need to increase risk awareness, probably risk culture as well. We need to go back to in a way a situation where people are more and people, companies, and everybody more risk aware, but have better risk culture, let's say. Of course, we need to do much more on prevention, so reducing exposure and vulnerability. And I would say that what my plea in a way, or final comment, would be to really try to intensify cooperation across the different layers, all the different stakeholders, and try to more and more move away from operating in silos. So we need to work together as a team and try to avoid splitting the responsibilities without cooperation.
Indeed, this is a very important point. So thank you very much, Nicholas. Thank you all for this session. And I would like to warmly thank all of you from the regulatory authorities, the public sector, and the insurance industry, both in Greece and abroad, for being with us today, sharing your experience and time. In concluding this workshop, I think it's clear that we have several messages emerging. First of all, climate change is, of course, no longer a future challenge, but a reality that is already affecting our economies, our businesses, and our households. The current protection gap in Europe and in Greece is significant and, of course, needs to become narrower. Insurance can enhance financial protection, the resilience of our societies, and, of course, promote faster economic recovery and safeguard our financial stability. Both the state and the insurance sector each have a role to play in addressing the impact of climate change, and we should extend this role beyond compensating losses. Prevention through understanding and managing climate-related risks is necessary. Of course, we've seen that data and innovation is monitoring these natural catastrophes will be key for better decision-making and increased resilience. The supervisory authorities, both in Europe and Greece, are focusing on ensuring that the insurance sector and the solvency of the sector is and robust consumer protection is there. Several actions are taking place, especially in the monitoring of the protection gap and the improving, of course, of public awareness and promoting the innovation in product design. As Nicholas, you mentioned as well in your last points that we need stronger cooperation between the state and the insurance industry in order to build our resilience against natural disasters. The public-private partnerships there, the risk pooling at European level, and risk-sharing mechanism could also support the narrowing of the protection gap and, of course, scaling up the adaptation and adaptation finance. In closing, let me state again that it is clear that the insurance sector is already playing a key role in enhancing our resilience, and it is essential that we continue to explore and expand in this area. This is also part of our scope for this workshop today. Thank you all for your participation. We had more than 200 participants joining us online today, and we are looking forward to seeing you again in one of our future events. Thank you.